Hey, Dan Passarelli here. Well, we had the Fed announcement today, and wouldn't you know it, there was basically no major surprises whatsoever. The Fed raised interest rates by 50 basis points and came out afterwards and, of course, said we're going to still keep an eye on inflation and interest rate hikes are probably not done yet, blah, 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 blah. And everybody really all knows that. If we zoom in and we look at a 1-minute chart of the S&P 500 today, we did get a little bit of volatility. This is just for the day. We did get a little volatility right when the number came out with a bit of a sell-off, which lasted from about 1 o'clock. This is in Central Time, that's where I am, to about 134 and then climbed. There's a little bit of volatility. The people who were long straddles going into this, you were either the quick or the dead. I think you either had to really take your profits near the bottom or else, the volatility coming out, VIX was down 1.21 on the day. Plus, the traders took a little bit of the weekend out too. You really had to pick your spot, get out of that straddle quick. If you were holding on to it, you probably ended up losing. So that being said, what do we have going forward here? Well, first, if we take a gander at the sectors today, which I'm just going to show you the group of them down here. The only one that was up on the day was our friend XLV. There it is. Was our friend XLV, which is the healthcare ETF. And everything else was, kind of down, but, no great shakes there. So if we just go back to the spiders and we look at that, what can we analyze going forward? Well, I think it's just going to be largely technical. I mean, this was sort of the big event, right? It's going to be largely technical. I think for the short term, at least the next couple of days, the 200-day moving average is likely to act as a ceiling, and I wouldn't be surprised if we get a little bit of bounce below it. If we go back over a year period, we see that, it really usually held pretty well with just a couple of periods of it passing through it. So the 200-day moving average is likely to act as at least a short-term ceiling piece of resistance. The 50-day moving average is not as strong of a line, could act as a little bit of support, but probably for the next 2 days we'll be in a bit of a range. And then we've got some things that I'm going to talk about in some other videos coming up the rest of this week that might come into play, but you're going to have to wait for those. This is Dan Passarelli. Hope that helped. Trade smart.